It's been one of those weeks where headlines and price action just don't match. Companies are laying off tens of thousands of employees, yet markets keep printing record highs. PwC is cutting over 5,000 people, UPS announced 48,000 layoffs, Chegg's trimming nearly half its staff, and Amazon could cut up to 30,000 roles. Even Paramount is joining the wave.
Yeah, and at the exact same time, we're seeing the S&P 500 and NASDAQ push toward new highs, NVIDIA striking new partnerships, Oracle's expanding AI infrastructure, and the whole tech sector looks unstoppable. It's this weird contrast. The economy's cooling in the headlines, but the market's heating up on the charts.
It's classic bull versus bear psychology. The bears say this is unsustainable, a bubble waiting to pop. The bulls argue that AI and efficiency are rewriting the old rules. Either way, we're living through one of the strangest rallies of the decade.
Let's talk numbers. The NASDAQ closed up about 0.74%, hitting a fresh all-time high. The Dow added 0.34%, and the S&P 500 gained slightly, now trading around 6860 points. The only laggard today was the Russell 2000, which dipped a bit into the red.
And here's what caught my eye. The S&P chart printed a red doji right at resistance. That's a sign of indecision, where buyers and sellers are fighting for control. Every time we've seen that candle pattern around these levels, we've had short pullbacks before another leg higher.
Exactly. It's a hesitation point. Investors want to stay bullish, but no one wants to be the last one buying the top. And yet, every dip keeps getting bought.
When you look under the surface, it's all tech again. Medicaps carried the rally, the same 5 or 6 names driving 80% of the market's gains this year.
Right, and that's the rotation story. Real estate and financials are lagging, while cloud, AI, and semiconductor giants dominate. It's defensive in a strange way. Investors are hiding inside trillion-dollar balance sheets.
And all of this comes ahead of the Fed meeting. Everyone's waiting for Powell's tone. If he even hints that this could be the last rate cut for a while, we could see volatility spike hard.
10-year Treasury yields are holding near 4%, signaling that markets believe inflation's easing but not gone. The bond market's message is simple: cautious optimism.
That tension between easing inflation and uncertain growth is why this week feels so critical. The setup is loaded.
Meanwhile, crypto is struggling to keep up with Bitcoin slipping back toward $13,000 again, and Ethereum's under $4,000. Even AI trading bots that usually outperform are showing weakness. Most of them have been trending down since late October.
Yeah, if your portfolio finished green this week, you probably beat the bots.
Now let's get to the main story, NVIDIA. The company's GTC conference in Washington drew hundreds of major corporations showing off new AI integrations built on NVIDIA hardware. It's basically become the backbone of the global AI ecosystem.
Exactly. NVIDIA isn't just selling chips, it's selling the entire AI infrastructure stack. Every big name you can think of is plugged in somewhere. Google Cloud, AWS, Azure, Oracle, Salesforce, Palantir, Disney, Mercedes, even biotech firms. They're all part of this web.
And the numbers are staggering. NVIDIA's market cap just crossed $4.8 trillion. Analysts are projecting over $500 billion in revenue in the next 5 quarters. That's more than some countries' GDP growth.
At the event, Jensen Huang even dedicated a full section to quantum computing, explaining how NVIDIA plans to merge quantum tech into its existing data centers. It's not hype anymore. It's engineering at scale.
Yeah, they're building what you could call the oxygen of the digital world. Every company working in AI, robotics, or simulation is breathing through NVIDIA.
And that's where the bubble talk starts. With a valuation around 35 times forward earnings, people say it's overheated. But if you split NVIDIA into 7 different companies, each running one layer of AI infrastructure, no one would call it overvalued.
Exactly. The scale just looks impossible. The question isn't whether AI is a bubble, it's whether growth can keep outpacing expectations. So far, it's doing just that.
Still, bears on CNBC are screaming about an epic collapse ahead, comparing it to the dot-com bust.
Sure, but they've been saying that since 2022. Timing matters. You can be right eventually and still lose money for years if you're early. As long as sales and innovation keep expanding, fear alone won't break the trend.
You can really feel that optimism when you listen to people like Jensen Huang or Alex Karp from Palantir. They both talk about how America's AI leadership is reshaping global competition.
Karp even said, "Everywhere I go, people are trying to catch up, but the US keeps moving faster." That's not arrogance, it's a fact. Manufacturing, energy, defense, software, AI is the multiplier behind all of it.
Exactly. And that's why we keep seeing this mix of layoffs and record profits. Companies are cutting staff but expanding margins through automation and AI. It's painful short-term but efficient long-term.
Looking at the big picture, year-to-date, the S&P 500 is up 17% and the Nasdaq is up 23%. Investors who stayed in through the noise are seeing strong returns.
Right, and even though it doesn't feel like a classic bull market, it absolutely is one. Prices keep climbing, sentiment's cautious, and that combination usually leads to continuation, not collapse.
So here's the real question. Are you focusing on the layoffs or the opportunity they create? Because while some firms are shrinking, others are doubling down on innovation. That's where the next wealth wave is forming.
And tomorrow we get the Fed decision. A dovish tone could extend the rally, while a surprise hawkish move might cool things down for a few sessions. Either way, volatility means opportunity.
Exactly. Smart investors aren't trying to predict the top. They're managing exposure and letting trends work for them.
Bottom line, despite all the fear, the fundamentals are still solid. Corporate profits, AI growth, and consumer spending haven't cracked.
And that's what matters. Headlines move emotions, but earnings move markets.
Stay disciplined, manage your risk, and don't let panic override your plan.
Right, because fear fades, but strong fundamentals last.
If you found this breakdown useful, don't forget to subscribe and turn on the bell. We'll be back tomorrow right after the Fed announcement for live coverage and analysis.
And remember, this is not financial advice, just our perspective. Stay sharp, trade smart, and we'll see you in the next one.